What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be looking at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. Before we get started, don't forget to check out the description below. Got some links to the merch shop, to Traders Helping Traders, where I'm hanging out during market hours, a whole bunch of other things. So go ahead and check that out. It'd really help me and support me a lot if you looked at those. Also, my socials are in socials are in there. So if you're trying to find me on Twitter, on Instagram, any of that stuff, you can find me there. So going to try to make this a quick video today. Got some other things to do, so we're going to just jump right into the charts. We had a lot of nice action today. We caught a really nice reversal, called it out in the live rooms, had a couple big winning trades, a couple 50%ers, depending on how far you ran it. If you caught the low, would have been a really nice trade, maybe even 100% trade. But we did catch some nice moves, and those were called out live with analysis to back it up. So it's not just a call out. The charts are posted. The DD is done. This is why it's going here and why, right? And so try to manage that risk, but also provide explanation so that you're not just blindly following a trade. Okay, so we have been talking about this bullish channel. And if you look on the daily chart, and as we drop down into lower time frames, you're going to see that we have broken that daily channel. Okay, we talked about that potential of happening yesterday as one of our scenarios, right? Because we do have this downtrend resistance line, this bearish resistance that we try to go up to. We try to go up to again. Didn't quite even make the high of that wick, right? Draw on liquidity here. Now we've traded back down. Okay, there's a smaller wick where liquidity rests. There's a liquidity in this wick as well. But the point is we've been trying to attempt this bearish resistance line, and we haven't broken above it. Doesn't mean we won't break above it. Probably the next time we try it, we'll break above it. But it's there and it's looming. We have this other bigger resistance line that's way up here as well. So two bearish resistant lines that we're watching. Okay, if you look at the moving averages, right? Price came down, ran a test on the 20. We're still above it. Rejected a 20 in VWAP on the daily, ran back up. Okay, came back down near the open of the daily fair value gap, ran back up. Okay, confluence in what we're seeing on smart money, on traditional indicators. So tomorrow, could we see price come down and continue to play around in this fair value gap? We certainly could. We saw it back here, right? We've talked about this. Price traded up, price traded down into. We had a large daily fair value gap here. We checked it out a few different times, 1, 2, 3, 4, 5 different days, 5 different wicks and candle bodies. And ultimately ended up, ripping off of it. So could we see that come down here? We got the 50. We got the 50 period, and so we could run a test on it. Yeah, you see I have an eye. I'm watching out for the sell side liquidity down here. We also have a magnet because there's sell side liquidity here. We also have moving averages, and this daily fair value gap, right? So price is going to be drawn into it whether it closes it or not. It is magnetic. So we're watching the sell side. We took some other sell side targets that we talked about yesterday. And an important thing to note on this chart is that we did not close a candle below the low of this breakout candle here, or this daily candle. Okay, so that was important. We came down and tested it. We didn't break below it. So that doesn't mean tomorrow we don't see another candle come down through it, but something of interest is that we did not choose to close below it today. So I have my daily range contained high. We've adjusted it because we are outside of this bullish channel. So no longer are we looking at the contain being the top of the next day's channel range because we're outside of it. So tomorrow, range contain, I'm looking at the top of this candle body being 266.22. Okay, we're looking at our bull bear pivot from being today's candle body open, not the wick, but the candle body open. Right? So if we do trade up and we trade through this and above it and we start closing 5-minute or 15-minute candles above the daily bull bear pivot, you could consider taking a long position inside there. We'd be back in the channel and we'd be potentially walking ourselves back up to some of the above buy side liquidity. Down below, we have daily low range contained down here, and I'm looking at this candle body, this breakout candle, right, for us not to probably trade below 254 tomorrow. Doesn't mean it can't, right? We did run a test down in the 256s. So if we really got cooking because we got bank earnings, we certainly could get down there. But I'm looking for price to probably stay above 254. I know there are some puts in the market. 250s, 255s. Previous max pain was 255. It adjusted to 260 after I think yesterday, and so we do have some willingness for price to come down into those areas. Right, current max pain 260. We know the gamma readings are, I believe, 260 to 280. So we are below where market makers would like price to be as far as again. Related to gamma, where they get the most pain out of it. It correlates with the max pain as well. So we got that. We do have RSI starting to point down, but still above the control line, or the 14-period moving average on the RSI. So although we're pointing down, which is a bearish look, we have not crossed under, and we haven't even crossed under the 50. So we're watching that. We'll be watching what price does tomorrow as far as the daily chart goes. So let's go ahead and we'll just drop down right into the 1 hour. We had some previous points of interest from lower time frames. Had a little magnet there. You can see we traded up to it with this wick here, and that was on today. And so the magnet was good. We were looking for we have candle body it respected, didn't get up into this wick, right? It really consolidated for a lot of today. Wasn't sure if we were going to get a move. Was looking for either continued distribution to the downside, right? Because we had consolidation in here, and then we had manipulation here, and then we started to get distribution, and then we were getting chopped around, and then we've gotten further distribution to the downside. So we see more downside tomorrow? Possibly. Fridays are often a reset day, and so I would not expect price to trade below maybe the Monday low, which we have labeled here, sell side liquidity on Monday's low at 250, call it 250, 225. So I would expect price to stay above that. But we also could see price trade right down to it. I also would expect price to not break above the weekly high of, we'll just say, 269. Okay, so that's the range I'm really looking at. We got our high-low contains, which are inside of that range. And so if we were to break either the high-low contain or the weekly high-low, which would be buy-side or sell-side liquidity, we do have other targets below that from last Friday, sell-side liquidity. We have a point of control line on a volume node, and then we have additional sell-side liquidity. Highly doubt we get down to into the 240s tomorrow, but we certainly could get, again, we have a 1 hour fair value gap here. We've traded up, we're trading back down. In the 1 hour, we are below some moving averages here. We're below the 50, below the 20, and we have a bearish fair value gap. So could we potentially trade up into that, test the trend line, and see us come back down and trade down to the daily range low or low range contain, or maybe even down to the sell side liquidity at 252 and some change, right? Those are possibilities. If we were to pop up back into this bullish channel that we were in, maybe this is a fake out, right? We did close some candles below, which is a nice look, but we are still testing this, just running a test on this 200 period on the 1 hour. So could we see some bounce there, which will send us back higher, maybe? But where's higher? Again, if we look at the moving averages in confluence with the bearish fair value gap here, if we traded up, we'd be hit by the 20 period inside the bearish fair value gap, and then potentially sell down more. Possibly looking for this fair value gap to get closed this week, tomorrow sometime. So that will mean candle bodies closing on the 1 hour chart below the low of this, which is 256, we'll call it. Okay, dropping further down. Dropping further down into the 15-minute chart, we are again looking at similar things. We had additional targets that were on our lower time frame charts, but we took all of those. They were sell-side liquidity targets that rested here, was one target, and we had some additional targets as well. We took those all out. This was just a massive move down today. I know we were looking for distribution to the downside, currently trading below the moving averages, under the 200 period. We got on the 15-minute chart, the 20 and the 50 coming down. So if we gap down maybe into this order block, right, that could be a nice look. We do have bank earnings coming out. Maybe we pull up, kind of give a fake out look like we're going back into the channel, come back down into this order block tomorrow. Totally possible, right? Or again, if we gap down, we could run up on bank earnings. I'm not quite sure what time those release, but we will be watching and listening to those. We do see RSI kind of bottomed out here and starting to rally with this big, this big bullish engulfing candle, and then we kind of just consolidated for the rest of the day. This is a bit of a bullish look here. We're above the control line on the RSI. We had a bottom. We took sell side liquidity that was in this candle body low, but we do still have this order block. It was tested over here once, so I do anticipate that if we come back down to it, we might see some kind of reaction, and then potentially into next week, take it out and come back down into this order block and this 15-minute fair value gap that is resting from a previous day. And so we also have fair value gaps in here that would be bearish from this wick to this wick. Okay, but that's up around our bull bear pivot, so we do expect if we head up there anyways, probably going to test that bull bear pivot line and see what happens. Drop down to the 5-minute chart for all you day traders out there and scalpers, right? And this is what we were talking about. We had our high, we had our open high, that first 15-minute range or so, right? And we did trade back up to it. I was telling traders in the room that if we get above that 15-minute high open, we are looking to load up on calls, and you could say also if we get down below that we could load up on puts, right? So even if you waited until this candle here to enter, you're getting in at 261, riding it down to 257. That's a nice scalp right there, right? And it didn't take very long, 115 to like an hour. You got a nice scalp in that position. If you waited, that would have been your confirmation, right? 15-minute high-low range, one breakout to one side or another. We never actually broke up to it, so there was no long entry there as far as loading up for the upside, and so we did end up getting that breakdown. The calls or the puts I called out were not based on those, but those would have been very sound entries. We used some other indicators that we were looking at, and so they happened to fall, I think, in maybe the silver bullet time macro, so we can turn that on too and take a look at it. Oh yeah, they weren't necessarily in there. I think we were looking at retracement levels. So when we look at this swing high to this swing low, the early entry would have been on the retrace. I think we looked at here. Might have got stopped out if you took the clean stop right here at 1. But we could also be looking at stops up here. I do believe on one of the call outs, because we caught this move, on one of the call outs, did get stopped on the first attempt, re-entered, and I think it was on a 1-minute fair value gap maybe that I was looking at, but re-entered somewhere down here and caught a nice ride. Had an early exit, didn't run those all the way, I don't think to the bottom, but congrats if you did. That was a huge trade. Also this inside the silver bullet range, okay, we were trading back up during to take the liquidity as we entered into the silver bullet, okay, and then you could have taken swing high to swing low here or even here, and then caught this optimal entry and then targeting a previous low. I'll show you that on the 1-minute chart. That's often the way you play the silver bullets. Okay, so I'm going to go ahead and take this fib level off for now. Okay, so what I will show you is we had our opening trading range to 945. Okay, right here, so we have our high, or our low, we have our high. We're trading back up, taking the liquidity here. Then we're looking for optimal trade entry. That's one of our silver bullet setups, is the optimal trade entry. Okay, so if you look at high of silver bullet here as we run on this liquidity, then we come down, we come back up into optimal trade entry. We took that entry, okay, and then we didn't quite get, during the silver bullet time frame, we did not quite get down to symmetrical swing, but if you draw it out a little bit further, you can see that we hit it to the wick, right? So perfect execution on that silver bullet setup, which ended just right outside the silver bullet time macro. And we did catch some of that. I don't think we caught all of it, but it ended up being like a 50% trade on that one. Okay, and we came back up. We tested a high. This seemed really suspicious with this test on the high. We just kind of got walked up on the moving averages, and then bam, you got a breakdown. I think I was late to the entry on this one. There was this fair value gap. I was kind of looking for price to come back up. Didn't look like it was going to, but we did have an RSI kind of topping process. And then I think it was somewhere around here that I ended up entering again, and then caught some of this ride down. And so inside this silver bullet, we had a reversal. And then again, after that, it was just kind of walking around. So, with the silver bullet, there's a couple different ways you can trade it. What I would have been looking for if I was entering this one, which I didn't, I was all tapped out for cash capital for the day. And so what you could be looking at is you could be looking at this RSI divergence, okay, which signals a bottom. We had a rapid sell-off. We took, I think, nearly perfectly took sell-side liquidity that rests in this. We didn't quite take that peak. We grabbed this one, and we grabbed sell-side liquidity there. So we had really cleared out a lot of liquidity targets. We were looking to see if we possibly wanted to sell all the way down here. Didn't. Okay, so you could be looking at this RSI divergence and say, all right, I'm going to enter because of that divergence. And you could have tried to grab one of these early fair value gaps, which are not listed on the indicator. But again, if you know what you're looking for in fair value gaps, we did have one right there. Okay, so as you start to see these fair value gaps lay, you could try to grab some kind of entry in a fair value gap. So that first one enters, you could enter, or you could wait for that second one and then enter. You would have caught some kind of move. It would have just been a scalp, 258. If you caught it to the top, 259.50, so $1.50 move. If you got the first fair value gap, you would have got about 257 all the way up to 259.50, so about $2.50 move on the stock, right? But it would have been a nice late day if you caught that. But you never know if it's going to rip because we were so bearish here that's kind of a risky play. And you'd be targeting a previous top right here, or right here, or even just right here, depending on your entry. So silver bullets often run one way, take a low, take a previous low, or take a previous high, right? And then you target a previous low or previous high. So because we took out the liquidity here, down here, on the way down, then you'd be taking the entry, you'd be targeting the previous highs here. So that's how you play that. Didn't end up playing it, but again, right now you can see this trend line that we are still below. That's that bullish trend line. We are currently hovering around the moving averages with the 200 period coming down, and we got VWAP. So could we run a test maybe on the 200 period or the VWAP coming into tomorrow totally, and then see a further sell down? And if we were selling down, we'd be looking down here at our order blocks on the 1 minute, on the daily low range contained. Or if we just take these moving averages out on the 1 minute, we're targeting back to the channel, the bullish channel support, which could act as resistance because we tore through it right here. So we might back test it and sell off, or we might just pop back into it and take the bull bear pivot. Maybe bank earnings are really positive. We come back up, we take the bull bear pivot, we load up here, unless you got an early entry down here. But this is the confirmation as we cross over this, right? We crossed under it today, could have caught a nice run, cross over it tomorrow, might head up into this order block, this fair value gap, or this order block here with the range high contained. So we'll just have to see what happens tomorrow, but happy trading. Nice end of the week. I hope you guys all smash it out of the park tomorrow, make lots of profit. Until next time, I'll see you guys later.